Hang Seng managing to hold on to some bit of a green today in trade. We are seeing Nikkei, that's holding on to the green.
Discuss the possibility as to whether ATF should be part of GST or not.
Nifty resistance comes in at 52,010 and 52,525.
Company Jefferies has initiated with buy recommendation of 52 rupee price target.
23,950 basically on the Nifty is what you have.
At some point, a lot of the money will also move out from the secondary market to primary market, and then it will have its own bearing on the overall market.
We will not need any external debt to finance the existing pipeline of assets that we have.
This is where Carraro has the legacy of 90 years of presence in global geographies.
Basically, what is happening is that the under-recoveries in a way have been piling up.
Well, it's been an extremely volatile trading session as far as the markets are concerned.
We have tremendous tailwind in terms of how the market has shifted from what it was than what it is today.
There are two models in the series. There's 3,501 and 3,502.
Over post 11 a.m., you've seen a very sharp sell-off. Markets now trading near the day's lowest point.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, the day so far has been tough. It's been in the red and there's been little by way of recovery, although I think from the lows 10-15 minutes back, maybe a slight bump, but that's about it. This is Closing Bell. We'll track the last 60 minutes today and the last 60 minutes this week as well. I am Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good afternoon.
Hi, it's been a tough last few days. In fact, this entire week, fifth consecutive day of losses. And this week, we're down about 4 to 5%.
Well, that's right. We have slipped a good 1,000 points from the high point. And in fact, now it appears that maybe the recent low as well could be in the offing. That's close to around 500 points away from here. But let's see whether or not the bulls have some fight back. The problem is the Nifty Bank, right? That's the one that's corrected from about 53,500 all the way to sub 51,000. That's a pain point, still 400 points away from the 200 EMA.
Absolutely, and most supports I think have been broken, and we are across the board pressure. So the next major support is only for the Nifty is only about 23,300, we'll see if we go down to a 23,263 is this exact low that the market bounced from. So 23,300 roughly. Is what we're looking at. There are 5 sectoral indices, the last I checked, and decent size, not small sectors, which are down over 2%. So there is, it's widespread. Declines outnumber advances some 4:1. And I just quickly looked at Friday to Friday so far, unless something dramatic happens now. But the Nifty for the week is down 4%. The Nifty Bank is down 5%. And you got the mid-cap index, which is down 3%. Small caps actually are better than, it's I think about 1.5% or so. Just under 2%. So broader markets, the broader indices have done much better than the Nifty and the Nifty Bank. So it's been tougher. Once again, no real news flow or anything of that sort. It's not as if the dollar has moved up a little bit more again. It just feels like just a drift lower with very little standing in the way. So it's not a concerted, enthusiastic selling on the downside, but just sort of, coming off pretty easy as well. Reema.
So Friday to Friday, the Sensex is down 3,700 points and the Nifty is down 950 points. And just in terms of, some of the negative news flow that we got through the week, which is weighed on the sentiment. One, the hawkish Fed cut. Secondly, heightened FI selling. The FIs in the last 3 days, Tuesday to Thursday, have sold close to about 12,000 crore rupees in the cash market. The India trade deficit also came in at record levels. So that on the economic front hasn't been great news. Talking about stocks which have, seen the maximum brunt of selling pressure, Tech Mahindra is leading the losses, 3.5% gone. Axis Bank, IndusInd Bank are underperforming even the frontline banking index. Both those stocks are down close to about 3%. In the auto pack, M&M and Tata Motors have slid close to about 2.5%. And it's not just Tech Mahindra. In fact, IT as a basket has underperformed today. The Nifty IT index has shown a cut of 2.5%, whereas the frontline indices are down 1%. So it's not just Tech Mahindra, but even a TCS. And TCS has been a big drag this week. TCS is down 2% today, 6.5% lower for the entire week. Very few places to hide, but pharma has been strong. So Dr. Reddy's continues to see buying. Dr. Reddy's, remember, got that Nomura upgrade yesterday, stocked it well, follow on buying today, 2.5% up on Dr. Reddy's, 9% gain for the week. Nestle, Apollo Hospitals, some of the life insurance companies too are seeing a bit of green.
Well, that's right. Rima, if you want to understand some sentiment of the market today, you look at a few of these new listings. MobiKwik, pull up the chart out there. The stock has lost more than 10% from the high point of the day. The other one is IKS. The stock was gap up. It's moved to the low point of the day as we speak, given up all of the gains that we saw earlier today. So that stock as well comes up for you. MobiKwik now down close to around 10% after seeing a big rally. IKS as well, just take a look at it. From the highs of the day, it's down more than 10%. Pull up a few more of these names. Olar has slipped a little bit. In Vero Infra, it gave you big gains. 160, I think, was the IPO price, went to around 370. It's corrected 18% in the matter of 2 sessions, now down close to around 10%. That limited flow factor working against you today. So keep that in mind. Mitesh Thakkar is with us. He's been negative for the last couple of trading sessions, at least on the index. Mitesh, it's playing out according to script. I think you were talking about a first stop at around 23,700 and then sliding further. What would you do? Hold on to your shorts?
So good afternoon, Nigel. Couple of observations which I was looking at. One, this 23,800, which was the 200 average, has been taken out. Two, I think there was a weekly trend line. If you look at the Nifty low, which was made way back in March of 23, and you join all subsequent lows, the trend line was also giving you support around this 23,800, 750 mark. That looks like, as Prashant quoted, unless something very dramatic happens, that looks like to be violated, which means that very likely that 23,350, which was the weekly pivot, that could be tested and most likely be taken out on the downside. And then if you look at the further pivots at lower levels, there's 23,000 and then there's 22,600. So I think the markets broadly will be under pressure. This week, the Nifty has fallen by about 4.5%. We are slightly oversold on the hourly and 2-hourly charts, but yet I think I'll maintain my view that bounce back should be used to sell into, and we'll in a higher quality event we'll see lower levels than the ones which we saw in November. So in that sense, the negative outlook continues. The other observation is Bank Nifty, which is now getting close to the weekly pivot and trend line, which is at about 50,000 levels. Let's hope that can give you a bounce back sometime next week. But if that breaks, then I think both the indices should have a slightly accelerated fall.
And if 50,000 breaks on the Nifty Bank, what could be the next support?
Then I think we are looking at a much lower level, which is closer to about 48,000 to about 47,700.
Oh, that's quite a fall for the Nifty Bank. What about stocks, Mitesh?
On the stock side, I have IDFC First Bank as a sell recommendation. That's something, which is just broken down. So keep a stop at about 63. Look for a target of around 59.5 to about 59. And IEX, the other one, which had a good pullback last few days, is now again getting into negative mode. So sell here as well with a stop at 183.5 for targets of 172.
Thank you. Let's talk about IT. Sorry. IT index is down close to about 1.5%, and it's slumping despite Accenture raising the FY25 guidance to 4 to 7%. Versus 3 to 6%, and also despite a Q1 beat. In fact, the Accenture stock did pretty well, on Wall Street yesterday, closing up with a gain of about 7%. Now, on the whole, the read-through for the Indian IT is neutral, some positive, some negative. The positives were strong BFSI growth, very strong hiring, and the third one is strength in generative AI. But that can be countered by saying the deal bookings were on the softer side. There is still no pickup in discretionary spending, particularly the smaller cycles, the smaller deals. Some of the larger deals are seeing traction, but spending has not come back in the smaller deals. And Europe, the company said, is more challenged than US. But I spoke to many analysts and they're saying there's nothing in the Accenture numbers which can explain a 1,000-point cut on the Nifty IT. Perhaps given the fact that IT stocks have done very well and Q3 is likely to be soft. So we've not got the CNBC-TV18 poll out for the Q3 numbers, but broadly Q3 could be a flattish kind of quarter. Some companies like TCS, Wipro could report negative growth, and even the ones where you could see a positive growth, it could be a growth of just about 0.5%. So on the whole, there is perhaps nothing in the Q3 numbers which justifies a significant upside from here on. And remember, the stock is up. The index itself is up 23% year to date. Individual stocks like Persistent, for example, Persistent is up 72% this year, and it's given a 5-year CAGR return of 80%. Another one, Coforge, which is under pressure today, 50% up this year, and the 5-year CAGR return for this stock is 45%. So many of these IT stocks, particularly mid-cap IT names, have seen a significant run-up. And now that Q3 is likely to be subdued, there is still no pickup in discretionary spend. Some profits may be being taken off as we wind down this year.
Well, absolutely. And, at least for the large cap IT, it's going to be, as Rima pointed out, chatter is it's perhaps a little subdued. Broader mid caps, names like Persistent, Coforge, etc. Stocks are, valuations are still punchy in many cases, and they've done well. Well, Prashant Paroda is now joining us. He's portfolio manager of emerging markets at Allspring Global Investments. Prashant, thank you very much. I hope you're enjoying your India trip. Good to see you.
Very much so. Nice to talk to you, Prashant.
Absolutely. So let's just take it slightly at a high level, and then we'll come down to what you like here. It's a big sell-off. Should we make how much should we read into what we're seeing right now? 4% down this week, for example. It's the end of the year. Maybe new allocations first 15-20 days of 2025. Or you think this is this will persist as we come back in January, as Trump takes gets into the White House, etc. What's your overall sense?
Yeah, I think the weakness in emerging markets might persist for some time, especially because if you look at, there's no real consensus on where tariffs would be. Dollar index continues to be strong versus the EM currencies. So I think this would be a near-term phenomenon. But having said that, from a longer-term perspective, we think the valuations on a lot of these names and a lot of these countries as well are pretty cheap. So once these headwinds go out of the picture, I think people will start reassessing the asset class.
Prashant, so in emerging market equities, what is the pecking order? Because the FIs have been selling in India.
Yeah. So I think so far, if you look at the emerging market, I think Taiwan has done the best, right? So Taiwan, and a lot of that has been driven by sort of AI capex boom. China has recovered as well. A lot of it is on the back of some monetary easing and expectations of stimulus going into next year as well. And India has done well as well. So if you look at these last three components, these continue to do well. But if you look at Korea, that's been very weak. Now, Korea, a lot of the weakness is sort of, Samsung related and DRAM related. And some of the Micron numbers on DRAM memory weren't that great this quarter as well. So I think the pecking order continues to be in favor of Taiwan, where AI capex continues to be very strong, and they're going into next year as well.
And where is India there in the pecking order?
India comes in the top 2 or 3 names as well. I think India is there as well. But obviously, you see, I think your channel did some analysis on earnings downgrades. So people are digesting some of the earnings downgrades. And we'll see, as long as there's some earnings visibility going into next year, I think some stocks relatively should do as well as in India as well. So I think the India, if you look at the MSCI EM index and MSCI India index, 27% of that is still financials, right? And a lot of the large cap banks haven't really worked this year. And a lot of the concern going into next year is still on asset quality. So I think financials being such a big component of the MSCI index, I think a lot of that will determine how sort of the index behaves going forward.
Got it. So let's just step back a little bit again. So financials, I'm assuming, is a space you like, right? Or
I mean, yes, you have to be very selective. I mean,
Yes.
you're always nervous investors in banks. And I think this quarter, you saw a divergence between asset quality between banks. That hurt some of the banks and not hurt the other banks as much. So I think financials, I think if you pick the right bank and kind of do your work on asset quality, you can make decent returns over the next 12 to 18 months in this sector.
Since Allspring is also a big US investor, are you seeing a pullback there? We had Ed Yardeni with us yesterday morning, and he was calling for a 10% plus pullback in the US. I think your view is the big risk, of course, is AI capex coming off. And if all that were to materialize, you think that'll hurt markets like India?
Well, I think India might actually be insulated. It will hurt Taiwan a lot more if AI capex kind of comes off. So you just look at the components of S&P 500, right? Like S&P 500 is up 22% year to date. And if you look, some of these, NVIDIA is up more than 160%. So a lot of this has been driven by this arms race that, I feel like Google, Microsoft, and Amazon have kind of taken over this arms race, and a lot of them continue to spend. And maybe they feel that this is existential for keeping their business. So we still see robustness in sort of their spends. But yes, that's a big risk for overall S&P 500 and even some emerging markets if some of this capex spend slows down next year, because people are building in expectations of growth going into next year as well.
So Prashant, given the nervousness surrounding the Indian earnings, will you hold off making fresh investments in India right now? And if you had to, where would you put your money?
So yes, I think pockets of financials seem interesting to us. Again, healthcare, I think continues to do well, and I think a lot of it will continue to have decent earnings going into next year. We're looking at some of the IT names as well. I mean, some of them, the mid caps have run a lot, but some of the large cap names that have not run so much. Presumably, discretionary spend. I know you were talking about Accenture, where discretionary spends haven't come back as such, but hopefully, if you see a couple of quarters of visibility on discretionary spends, that could be a good place going into the next 12 to 18 months.
You mean hospitals, when healthcare hospitals, right? Not okay.
Hospitals as well, pharma, there's some names, pharma as well. I think going into next year, that will also continue to do okay. I think the market will become very selective. And if your expectations are sky high and you disappoint, I think it will be tough to kind of maintain your valuations.
Nifty, actually in rupee terms, not dollar terms, rupee is up 10% this year. Nifty is up, sorry. Did I say rupee? I said the Nifty is up 10% this year in rupee terms. But the mid-cap and small-cap indices are up 27. You subtract how much ever we're down today, but it's a solid 25% plus on mid and small-cap indices here in India. Again, in rupee terms. And of course, the US has done what it has done, right? A remarkable 27 to 28% kind of a year, 2024. So we're coming off in a pretty strong way in that sense. Just one last question, Prashant. Are there any specific, maybe lots of newer sectors like renewable energy, energy transition, etc., which are emerging. Some need some protection, and we're doing that. The government here is doing that, and markets are responding. But not just that, but anything to your mind which perhaps will be on Mr. Trump's radar, directly, indirectly, in terms of tariffs or whatever else. Since you track that pretty closely, yeah.
Yes, I think renewable energy. I mean, to the extent there were some companies that have a business of selling to US, and maybe they were importing some cells from China and making the modules and selling to US. I think what the Trump administration is kind of talking about is sort of maybe a blanket tariff across the board to make sure that the China tariffs don't end up having a trade deficit somewhere else. And with regards to China, I think they're still not clear about how to approach it, and I think we'll see more color on it as the year goes by. But I think renewable energy from a U.S. perspective, I know Trump administration has been talking about cutting back some of the spends on clean and renewable energy, but a lot of the states that get this spend are actually red states. So, for example, Texas and some of the southern states. So, I think there will be a balance there somewhere, but some of these companies will continue to do well in India, where there is definitely a big impetus to grow the renewable sources.
Got that. Thank you very much, Prashant. Appreciate you joining us, and great conversation as always. Enjoy your trip here, and we'll chat again soon. Thanks very much. All right, we'll take a quick commercial break here. We'll come back and we connect with Sanjay Parekh from Soham Asset Managers on the other side. Lots to talk about as far as Sanjay's top ideas, top bets are concerned as we head into 2025. Stay tuned.
Welcome back. Extending its loss a little bit more. When we started the show at 2:30, the Nifty was at 23,700. So from that level, it's another 50 points gone. So 300-point cut now on the Nifty. The Sensex is down close to about 1,000 points. Mid-cap's down 2.25% at the day's low. Siemens is under severe pressure. This is after the earnings call. Bamakshi is here with the details. Bamakshi.
Well, absolutely, Reema. The stock is tanking in trade after commentary that came through from the management in the conference call that was held earlier today. The key negatives this time around was on the private capex front. They said that private capex in semiconductors, batteries and EV is good, but it is very slow in the traditional technologies, and resultantly, when we look at the overall private capex, it has not picked up meaningfully. Apart from that, HVDC and large railway locomotives or Vande Bharat orders were key triggers for Siemens. But on that front, especially on HVDC, the company has said that they are not present in LCC technology. Now, there are two types of technology. LCC is line commuted converters, and the other technology is VSC, which is voltage source converter. So what the company has said that they're present only in VSC, and resultantly they will not be participating in any tenders for LCC, which are some of the major tenders that are upcoming in India. Now what they've said is that on railways, they said that Indian Railways is slow on giving out large ticket locomotives as well as Vande Bharat orders, and they also highlighted that the government is yet to decide on 6,000 horsepower locos, and this in turn is in-house for Indian Railways, or the other option is 12,000 horsepower locos, which is provided by Alstom as well as Siemens, and because the government has to decide on both of these factors, the tendering has not yet happened over the last 12 to 18 months, so that is another bit of negative. And apart from that, they also say that there are 2 orders for Vande Bharat in the pipeline, but ordering out here was quite slow. So given those factors on private capex, HVDC as well as the railways bit of the business, that is the reason why the stock is tanking in trade.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's welcome our guest this afternoon. We have Sanjay Parekh, founder and CIO at Soham Asset Managers. Hi, Sanjay. Good afternoon. What's going on? No sign of Santa. So Santa is, making an entry and exit very quickly. The bulls are hoping that he stays longer, but that's not the case. How are you feeling about the markets? I mean, towards the end of the year, what is the cash levels you're sitting on and deploying or not?
Yeah, so Nigel, good afternoon. So basically, I think, a bit of global uncertainty, a bit of dollars being stronger, and hence EM currency being weaker. But I think the most important is the earnings season. I think as we enter into the Q3 earnings season, we've seen Q1 and Q2 quite weak. And as we see sectorally and engage with companies, we think Q3 will also be quite tepid. And hence, we will have to look for signals of recovery in Q4, hopefully when the government spend picks up. Because the government spend is just at the last leg of Q3 is where they're starting to spend. It's still not broad-based. You saw that in Siemens commentary as well. And certainly we are seeing on the rural piece also, FMCG players are talking about still a prolonged slowdown. So it's going to be a weak quarter is what I understand, and hence market will pause or react as well. But I think more so the time correction is what I see from here. I think the price correction by and large we are done.
Okay, time correction is what we will see. Price correction is largely done. Sanjay, good afternoon. Good to see you back on the program. Prashant here. So, talk to us about what you are really convinced about. Let's take 1 or 2 stocks as examples.
I mean, we still have that same domestic overweight and global. I mean, globally, we've reduced our underweight, which was there in technology, and but still we are underweight. Of course, we got hit in the last 3-4 months, but the stock selection helped, like Infosys and HCL Tech helped us. Pharma, we are mild overweight. We're not there in oil and gas or FMCG. FMCG, we still feel that growth is going to be quite tepid, and valuations are still stretched. And the rest of domestic, like auto, we are mild overweight. Financials, we are overweight. Banking, mild overweight. Telecom, we are overweight. Capital goods, we are overweight. So overall, our portfolio basis, we are comfortable because the valuations are reasonable. Our portfolio price earning is 15.7 times for growth rate of 19% and ROEs of 17%. So we are fine. Having said that, I still feel that earnings season being weaker will also hit to some of our holdings. Like in banking, what we hear is credit growth we've seen is 10.6%. It will reflect in earnings. And there is definitely some edge, some increase in credit cost because of personal loan and credit card. And of course, those who are exposed to MFI will be largely impacted. So we're going to have even a weak season in banking financials also is what I think is what.
So what's the cash level now, Sanjay?
It's 7%, right?
7%. And what about investments in new age tech companies or any of the new IPOs? Have you been deploying there?
New IPOs, I mean, there's certainly some of them are good, but at the point they get listed, we feel at least that they're quite euphoric on valuation, and our style is not where we would be overpaying for growth, and that conservatism sometimes hit you also. So we've not been very active in we're there in few of them, but not a lot of them we not participated.
IPOs you participated in?
Yeah, so we did own a little bit of Vari earlier, but we sold it. And other than that, we do look for, I mean, you see the oversubscription levels. So even allotment as a fund, we don't get much if we apply, unless it's an anchor. So we've not been very active. We watch and we very closely look at it, but some of them are really at a steep premium to our assessment of value. We're not able to participate actively. And then we do compare, while there are two markets at times, what we feel is the listed existing segment and the new IPOs, which are like what we call in the Hindi, Nayi Dulhan, where they're genuinely priced very, very differently. So then we are comfortable with our own stocks and we hold on when we compare with our existing portfolio. In fact, some of the larger caps are very, very reasonable than some of these listings. So then we are okay. And luckily, performance is on our side, so we can afford to miss out.
Okay, all right. Sanjay, I wanted your view on one of those stocks. Towards the end of 2023, people were wondering whether Mr. Agarwal is going to default or not. And in 2024, Vedanta actually has been the stock of the year. The stock, I think, has given 80-85% returns. It's also thrown in that token 43 rupees of dividend. 43 rupees of dividend on a stock price of around 260 rupees. I think you all were playing out that theme as well. Do you believe there's more juice in this stock?
Right. So, here is where, and you all have also covered it so well, taking his interview. And here was, we were really lucky to have added way down. And then we actually increased at all levels because we get money at a different point of time. And, as early as just 5-7% lower also we've added. And as you rightly said, your entry point also helps you. And then you get a dividend of 43 rupees. The global parent debt has significantly reduced. The cost of debt, as you all know, is in dollar terms is almost less than 10%. And you'll see it getting better and better. So once that happens, the entire overhang, which was a worry for a lot of investors that the parent debt could someday spill over in some way to the listed company, is clearly, the parent, the promoters have stood by what they said. And that confidence will further re-rate the stock is what we believe. And we genuinely believe from here also, there's a very good runway for growth. I mean, you'll have interim volatility in metal prices and hence the price volatility. But if you take a 2.5 year view, it could be a serious compounder from here as well. And the best part is the dividends will still flow through, at least in the next 2-3 years, because the parent still wants the debt to come down there to 3 billion and below. So we are very, very positive. We are overweight on this. In fact, this is the only metal stock we own.
Yeah, no, I was looking at your portfolio and you're saying that there's serious money to be made even from here. That's interesting to hear that.
I think
and that
even today
six-way demerger, etc. has to happen. So
Yeah, Prashant, the demerger, as we see, we had Raymond's earlier. And whenever there is a demerger, there's some the combined piece was at 10,000 crore. Today, one of them is at 12,000 crores, the other one is at 12,000 crores. And this is a matter of just not even 12 months, So here again, I believe that as the companies get focused, and they have been very clear of where the debt would reside. And some of the businesses like aluminum and can be very, very good. And then investors can decide where they want to be. But these splits generally have created a lot of value. But apart from that, I think the debt management at the global level was the biggest hangover, which will re-rate if you take the metal, some of the ferrous companies, on lower EBITDA per ton, they're at 7.5 times, some of them at 8 times. Here today also, I think even in a current price, the implied valuation will not be more than 5 times. So there is a very clear scope of re-rating, even if it is at 6.5 times. And then split would have more focused companies. And that would again add down and create value. And then dividends would be an add-on. So I think it's a real good deleveraging story at the parent level. And even at the India level, in the listed segment also, they have said that they will deliver. And one of the worry was if they would take up some of these semiconductor projects in the listed play. I think that also they have denied. So I think, as the confidence builds up, there could be a serious compounding even from here on at Vedanta.
All right. Thanks very much, Sanjay, for joining us. Good chat. And if you don't speak again,
have a great year.
Happy holidays. And absolutely. Thank you so much. And to you too and your team. Well, let's focus on D Street chatter now. Nimesh is joining us with exactly that. Before that, I have to just make a quick mention of the market. There was some recovery actually. Now the losses have doubled. It's from being down 200, we're down almost 400 points now. So 1.6%, down 23,580, and looking very, very shaky out there. Nifty Bank is also not at the day's low, but not very far away either. The low is about 50,600. We're about 50,730 at this point in time. So it's just gone the other way.
Yes.
It's like a dive, a straight dive. Let's hear what the chatter is. Nimesh is standing by with D Street Chatter in the studios for a change. Nimesh, hi.
Hi, Prashant. So, while I started off, it looked like it was a sharp sell-off. But now in the last 30 minutes or 15 minutes, it looks like it's turning out to be a very brutal sell-off for the Indian markets. And remember, this week itself, the Nifty is down 1,000 odd points. Quietly it's taken out 1,000 points. And now a lot of crucial support levels are also broken on the downside. So I guess that's showing up in the broader markets as well. The first signs of bit of panic selling, or so to say capitulation as well in the broader market names today. The mid-cap index is down more than 2.5%. So clearly it's not only large cap driven now, it's spread out to the broader market stocks as well. Today's fall is largely led by technology names, and most of the technology stocks are down 4-5-6%, and some bit of the selling in the financials continue. So that drag from the financials continue. But today I think IT has joined in on the downside. But clearly, given the fact that some crucial levels are broken on the downside, you're seeing a bit of sell-off or a capitulation, so to speak, in the broader market stocks as well.
What about stocks, Nimesh?
Well, so in terms of individual names, the first stock is Oracle Finance. We saw a big move in yesterday's trade. Well, the stock is down on the back of entire IT pack down. But off late, the indication is there are buy flows and some domestic mutual funds are aggressive buyers in Oracle at these levels. So that's the first name. The second stock is Arcade Developers, a recent listing. Well, the stock is recovered from the day's low. The stock was under pressure in the morning trade, largely because of the anchor lock-in getting over. So there was a bit of supply which got absorbed by some HNIs is what I understand. The third name is Indian Metals and Ferroalloys, IMFA. Well, the stock has been consolidating with the positive bias, but the street is anticipating some corporate development in IMFA very soon. So that's the event to track there. And the last is Sunflag Iron. Again, kind of because of the cross-holding that they have, some HNI seems to be quite active buyers of late, and hence you're seeing a bit of up move as well in Sunflag Iron in the last couple of days. And looks like some HNI interest is back in this particular name.
Okay, all right, Nimesh. Thanks a lot for that. Well, on that note, though, we'll slip into a short break. Come back. As always, we'll get you a buy or sell call for a reverse trade in the coming days. Stay with us. Well, no signs of a recovery, but at least stability for now. Sharp downtick, and now we're stabilizing at these levels. The one that is trying to fight back, at least, is ICICI Bank. It's trying to put in a bit of a punch, but it seems, the opposition is too strong, right? Yeah, ICICI Bank currently at the high point of the day, but can do little when you have all the other stocks that are lower. Mitesh Thakkar is back with us. Mitesh, first, carry your shots. Point number 2, what are your fresh trades?
Weekend is always a tricky matter, I think, to carry shorts. But I would suggest, people who had shorts earlier take profits, get into newer spread with lower strikes. So I think that's the way only you can play this out. This is an extremely sharp fall. No reason that will reverse. And, we were looking at targets of 23,350. I mean, we don't see very far away from there. So maybe we'll hit those on Monday. I don't know that. But yeah, it looks like that the trend should continue on the downside given the fact that the weakness is persisting as we close. On the stock side, I have a STBT on IRB Infra. Keep a stop at about levels of 56.10, look for targets of 54. And LTTS is the other one, which is broken down with time. So sell here, or STBT here with a stop at 48.51 for targets of 47.70.
Got it. Okay, Mitesh, thanks a lot for that. Well, let's focus on Bajaj Auto. They've unveiled their latest new edition. Chetak electric scooter in Pune earlier today. There are 2 models that they have launched. They've given the pricing, it's at around 1,20,000 rupees. The electric scooters came in with a range of interaction via touch sensitivity, inbuilt document storage, music player, along with calling and texting options. From the sidelines of the launch, our colleague Rachna caught up with Bajaj Auto's Executive Director, Rakesh Sharma. Let's listen into what he had to say on the new product.
Well, lots of new things. We are delighted with this major step forward which Chetak has got today with the launch of the 3.5 platform. Now, at first glance, you may feel that the styling is the same, and indeed, the styling, the very smooth, elegant styling with its signature horseshoe headlamp remains the same, and largely because the customers have voted style as one of the key reasons why they are buying it. It's new classical range. But under this style, there are a whole lot of new things. The first major breakthrough is in the battery. The battery, which used to be 3.2 kilowatt hour, and it was here in the body, has now become 3.5 kilowatt hour and has moved down into the floorboard area. And that now gives this battery gives 2 or 3 things for this 3.5 platform. The first is the higher range. The range, the IDC range, is now 153 kilometers, or let's say in normal driving conditions with a reasonably competent rider, it would be about 125 kilometers on a full charge. The battery has also now got the capability of fast charge. 80% charge level can be reached within a couple of hours. So you can go to a restaurant, and by the time you're done with your meal, the Chetak is back to 80% charge. The third thing in the battery, which is very, very helpful, is the cost reduction which is taken place. And this allows us to now really step on it because, the bottom line is much better than what it was earlier. Besides the battery, and because of the battery moving down to the floorboard area, a lot of space has got released over here, and this space at 35 liters is perhaps the biggest space in the electric two-wheeler business. It's enough to put 2 full-sized helmets over here, and other knickknacks and other stuff. The other thing which of significance which has happened is that we've got an absolutely new console, which is a TFT console with touch facility, so that it is very well integrated with the maps function, so navigation through touchscreen becomes possible. And of course, there are a whole lot of other features which are there on the vehicle as well as on the app. Over 35 features, right from moderating the display, geofencing, and document storage, music, call alerts, whole lot of stuff like that has really amped up the tech quotient of Chetak.
Okay, let's move on. We had one listing today, International Gemological Institute, and it had a good listing despite the overall weakness in the market. It listed with a premium of about 22%. Didn't hold on to the entire bid, but it's still in the green right now, 13% up. Mangalam is here with more details. Mangalam.
Absolutely. So it was one of those listings that was on the green side today. The stock listed at around 510 rupees versus an issue price of 417. Market cap closer to around that 20,000 crore mark right now as well. And if you annualize the 9-month earnings, into 2024, the stock is actually currently at current levels trading at 47 times annualized CY24 price to earnings itself. What does the company do? It provides certifications for diamonds, studded jewelry and colored stones. It's the world's second largest independent certification and accreditation services provider, and more importantly has a global market share of 33% as well as far as volumes are concerned in CY 2023 itself. Fresh issue from the proceeds of the IPO will be responsible, will take the company's structure more global. They will have operations in India, Belgium, Netherlands, Turkey, UAE, Israel and a bunch of other countries as well. For the first 9 months of this calendar year, they've done revenues closer to 600 crores. And because it's a certification business, the margins are a lot higher, close to around that 72% mark itself. And they have a net profit margin of around 35% as well. Once the company consolidates the other businesses, and that's where you have to look at the pro forma business, where existing revenue from the current company, then IGI, Belgium and Netherlands together would be close to around 800 crores for the first 9 months of this year. Earnings are a function of volumes and uniqueness of the diamonds is what the company had earlier told us. Natural diamonds bring the uniqueness, whereas lab-grown diamonds, which have now turned to around 60% of their overall contribution, will bring the volumes. The margins to the company, they believe, are stable at around that 72% mark, and they are growing at 30% in India, and they believe lab-grown diamonds will drive growth going forward. The only thing we need to watch out for is certification for lab-grown diamonds, whether they're needed in the near future or not, once it becomes a lot more commonplace. So we'll keep an eye out on the sustainability of these revenues going forward.
Thank you very much for that. That is an important point. But moving on now, the 55th GST Council meet is all set to take place tomorrow. And a lot of items are on the agenda. So there is going to be intense deliberation and discussions. Timsy joins in with what she's picked up from her sources.
Well, that's right. The upcoming GST Council meeting, which is slated to meet on 21st of December in Jaisalmer, has a packed agenda. Firstly, top on the list could be Rate Rationalization's Group of Ministers report, which is likely to be tabled in the council meeting only. Till now it is not on the agenda, but yes, it is likely to be tabled during the council meeting. If proposed, this group of ministers can propose a special rate of 35% on tobacco and tobacco products, aerated beverages, ready-made garments, luxury wristwatches, etc. could get expensive, and many common use items could see a rate cut. Apart from that, group of ministers on health insurance and life insurance premium are likely to submit its report. Group of ministers is likely to propose exemption on individual term life insurances and on health insurance for senior citizens, and for non-senior citizens for a cover up to 5 lakh rupees per annum is likely to be exempted. Apart from that, Council could discuss the possibility of bringing ATF under the GST regime. Also, Council could discuss on the taxation of e-commerce food delivery apps, where delivery charges are currently charged at 18%, but now they are likely to propose a 5% without ITC, that too retrospectively from 1st of Jan 2022. Also on the agenda is payment aggregators issue, that the charges that payment aggregators get, 18% GST should be levied on transactions below 2,000 rupees that are done via card payments. So that could be a bump for people. Apart from that, many items are there on the council's agenda. Clarity for namkeen sector, clarity for all your real estate players and much more. Let's see what all gets cleared. Back to you.
Timsy, thank you very much for that. 8 minutes left for markets to close. We'll slip into a very short break and we'll come back. Ending with a cut of more than 1,000 points on the Sensex. 4,000 gone for the Sensex this week. Quite ugly. Hemang Jani is now with us on the show. Hemang, what have you picked up from the deal street, or what have you picked up from what's happening at the brokerages?
So clearly, I think, Rima, one important aspect is that the volume, both in the cash and the derivative, has dipped actually by about 20 to 25%. And, because of that, whenever you see large scale selling, the impact is on a higher side, be it the indices or on some of the stocks that we are talking about. And clearly, there is a bit of an uncertainty as to how exactly this settlement related thing is going to play out on the options front. So I think at the moment, it would be good to kind of wait out and have some clarity on the earnings, and based on that, only it would be advisable to take a bigger call.
What about Dr. Reddy's? That's been the big winner for the week. 7% up. On the way down, it's Shriram Finance, 10% lower. Would you buy Shriram Finance on the dip, or would you latch on to Dr. Reddy's?
I think Shriram Finance, the stock has corrected sharply, as you said, and I think not much of an issue when it comes to asset quality. By and large, it's holding out pretty well. So that would be a good, level to start, buying into some of these names where the valuation comfort is there. The growth is going to be 16-18%. Yes, there is a slowdown on the CV cycle, but I don't think it's going to be a very nasty one. So surely looking at buying into that.
Okay, and what about tech? What explains the kind of fall that we've seen in tech names, and would you go out there and buy?
I think, after two good quarters, people have, a bit of a doubt about the earnings, in Q3, particularly from names like LTIM and TCS. So when people are going into the result season with a bit of a high expectations, there can be a bit of a disappointment if the earning is not in line. So I think which is what is, the reason why you're seeing weakness in the tech names. I would certainly stay away because the sector has done well. Let's wait out, see the numbers, and based on the actual numbers and the growth outlook, it would be advisable to take a call.
Hemang, short conversation, but thank you for joining in. Enjoy your weekend. Counting down. The Nifty is ending at 23,600. It's fallen close to about 5% so far this week, and the Nifty is 4.5%, and the Nifty is down close to about 10% from its 52-week high now. The mid-cap index has seen a bigger fall. The mid-cap index down nearly 2.8%, 1,600 points lower on the mid-cap index, ending the week with a 3.5% cut. Advanced decline ratio abysmal, 2,000 stocks declining compared to about 400 stocks advancing. No sector managed to go unscathed today. Realty leading the losses, 4% lower. PSU Bank slumped. The overall Nifty Bank also down 2.5%. Nifty IT index down 2.5%. Across the board weakness. Handful of gainers: Dr. Reddy, JSW Steel, ICICI Bank, Nestle, HDFC Life. These are just 5 out of the Nifty 50 stocks which managed to see some gain. There goes the bell, and the Nifty is ending with steep losses, Nifty and Sensex, of close to about 5% for the week. We're going to wrap on closing bell. Don't go anywhere. Our favorite Friday special, Editors Roundtable, is up next.
After the step.
Yeah. Ashwini, hi, can you hear us?
I put my shades in on it.
Yeah, I can. Can you hear me?
Yes, so we can hear you. Surabhi here, Nigel, Prashant and Nimesh are with me in the
Sunny
studio.
was stopping on me.
Hi. Hello, everyone.
Hi, Ashwini.
What school today again?
Yeah, today second day the same show.
Oh, you have to go for both shows, is it?
No, I don't have to, but my wife has told me and I'm at home for the next few days. I want it to be a pleasant one.
She has already put it out on social media.
No, I have put it out.
What? No.
Nivi.
No.